Welcome back, friends. There is an energy crisis in Europe, and the prices of hydrocarbons are on the up once again. Whether we call propane prices, natural gas prices, they all seem to be on an upswing because of declining inventories in many parts of the world, including the United States of America. Today, we had data from China which shows a slowing down of business activity more than anticipated. So that's not a very good sign either. As far as the US bond market is concerned, we saw a rather a week where there was an outside reversal day in the long-term bond futures. In fact, there was an outside reversal week in what I would call the long-term bond futures. So there was a reversal both in the on a daily basis and also on a weekly basis, and this is something which we have seen only a couple of times in the last 5 to 7 years. So that's not a very good sign. I mean, you're seeing that there are lower bond prices and higher bond yields. That's not very optimistic scenario from the stock market perspective, and sooner or later this is bound to reflect in stock valuations. The whole rebound that we have seen in the months of July and in August have been predicated on the basis of falling crude oil prices. Now, crude oil is also on a short-term basis facing a larger backwardation. And for those who understand commodity futures, this is bullish for the crude oil prices per se. At the same time, we have Saudi Aramco announcing that they will be hiking the production. And that's probably something which can act as an offset. Yet, we must keep a close watch on the crude oil prices. Also, we must keep a very close eye on the grain prices, livestock, copper all seem to be on an upswing once again. Gold had reached about $1,825 a troy ounce, has come back a little to $1,790 today, but needs to be watched again very cautiously. So natural gas prices, as they edge towards $9 per British thermal unit, can also lead to the bond yields going up. They have fallen quite a bit, the 10 years and the 30 years, and that can act as a reversal. Okay, this can all come and puncture the stock market rally. So you can ask me that where would you like to put your money? Whether you would like to put your money in options on the Cincinnati Reds. It was a nice game, by the way, last night. Not really. Enjoy the rally. There is still some rebound remaining, a little more. As I've cautioned before, the big falls are yet to come. But for the matter, the summer rally is on. Enjoy the party while it lasts. Dow futures and Nasdaq futures sharply lower at this point of time. Over 178 points down on Dow futures, 77 points down on Nasdaq futures. As far as I can see, we should see a better market today. There may be some falls, but they will be far in between. For example, we can see some fall between 12 and 12:10 p.m. Eastern Time. You can see fall after 2:50 p.m. In the United States, New York time. You can also see some falls 150 to 220 in that neighborhood. Also, you can see some falls 11:10 to 11:40 in the morning. So there may be many falls, but by and large, what the Dow futures and Nasdaq futures are suggesting may be a little different from how Dow and Nasdaq expected to perform today. Do not forget the fact that the inventories are very, very tight as far as all these hydrocarbons are concerned. The propane, natural gas. The Taiwan issue is gathering pace once again, and this can impact the chip prices, which are already they have gone through a rather difficult time They just were on the verge of amends recently, but on the whole, the chip prices could get impacted should the Taiwan-China issue escalate any further. Empirical evidence is showing that the exports into the China-Taiwan zone have slowed down over the last few weeks. Be careful. After Pelosi's visit to Taiwan, and now we have a high-level delegation from the United States landing also there. So China not happy about it. All this can impact semiconductor prices and can also have a deep impact on inflation. The basic premise of the rally, the stock market rally, has been inflation going down dramatically, and expectations therefore that the US Federal Reserve will reduce interest rates, will not reduce interest rates, but will not hike interest rates to the extent that was being anticipated on the back of a falling inflation graph. Should inflation escalate further, the Federal Reserve may in fact raise interest rates rather than try and de-escalate the rise. That's not very bullish for stock markets once again. So we have rising commodity prices, grain, livestock, copper, hydrocarbons, propane, natural gas, oil, and we have precious metals like gold also now on the upswing. All this needs to be watched cautiously and can severely dampen the rebound as of now and in the very short run. For today, enjoy, right? Falls in between, far in between though, as far as the United States is concerned. And yes, to get more detailed timings and understanding of where the markets are headed this week and beyond, it's going to be a very exciting year, rest of the year. Next, if I am correct, I would suggest that the next 4 months will carry such a nice graph of volatility that probably you've never seen before. The falls will shake you from time to time so solidly that they will dampen the animal spirits that have arisen. Unless and until you get to know all this in advance, and we just drew out a map for the rest of the year, how we expect the next 4 months to span out. I always, as a matter of homework, go actually 3 years into the future. So we have drawn out a graph where the big falls and the big rises are expected. Friends, it's a scenario that is worth mentioning. Yes, some good falls are yet to come. Take advantage of them. Don't treat it as a dampener. Treat it to your advantage. And to get to more detailed information about how the markets are expected to perform over the short, medium, and long term, please do join my Prime Plus groups for the US markets. For the Indian markets, you can join Premium Plus, or Premium Elite. Number to get in touch, 982-086-1044. You can also WhatsApp me on this number, or you can email me at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. Friends, it's really as we have seen the rebound, you've seen many animal spirits rise once again. Many people have recovered the losses which they had over the first half of this year, and there seems to be that the bull is back with a vengeance. There is a behavioral side of investing which says that whenever people become too overconfident, or rather complacent, the markets turn. Some time back we had that the falls became so pronounced that the only way people saw the markets could move was down, and it turned and the rebound came. I was the one in January pointed off a good correction in stocks. Some people nicknamed it as the Haboob. Thanks to them. I respect everybody. And one should. Every human being should be respected. Every human being. All are children of God. Anyway, we saw the good correction. End of June, I had predicted a rebound in stock prices. We have seen that as well. How long the rebound will last, where the markets will turn once again. Please do join my Prime or Prime Plus groups for the US markets, or the Premium Plus for the Indian markets. To get more detailed analysis, please WhatsApp us 9820861044 or email us at globalmoneyinvestor@gmail.com. So happy investing, and all in India. I'm sure you have unfurled the national flag. India celebrates its 75th Independence Day. So happy Independence Day to a well fought